we are seeing, though, is consumers opting for less coverage. Someone who is extremely price sensitive, or maybe on a fixed income, that $1,700 insurance payment for the year, like that's it.
Welcome to 5 Minutes, your quick dive into the wide-ranging world of insurance, technology, and leadership. I'm Miguel Edwards, and I'll be your guide as we explore these topics that are transforming not just the insurance industry, but the business world at large. Along with sharing observations I've made over the span of my career in insurance, technology, and operations, I'll be chatting with some of the brightest minds in business and leadership. Whether you're a seasoned executive or a rising star, an industry expert, or just curious about how technology is revolutionizing insurance, this is your perfect spot for your weekly dose of insights. This is 5 Minutes. Taylor Mobley, thank you so much for being on the call with me, man. I really appreciate you joining us here for another episode of 5 Minutes, man. So we're gonna dive into some awesome concepts around insurance, and I'm learning more and more about the MGA space. So I'm excited to ask you some really fascinating questions. You ready to go?
Yeah, absolutely. Thanks for having me.
The one way I like to start all these conversations, because, and by the way, I am keeping track of all of my guests at this point. Now I'm at 17% of all of my guests actually decided when they were in college to pursue a career in insurance. The balance of people got sucked into the insurance vortex somehow, some way, kind of like me. And we can't get out, right? Because it's just one of those things where you're hooked. So give us a little bit about your background and whether or not it was intentional or if you got too close to that vortex.
It happened while I was in college. My first job out of school was with Ernst & Young. Okay. So came up in accounting, finance path, got slotted in on an insurance audit team as a junior in college.
Okay.
And started with EY then after graduation, back on the same insurance audit team in Cincinnati, Ohio, and the rest is history.
Got it. So I'm going to classify that as getting sucked in. Yeah.
Yeah, I definitely didn't proactively say, hey, I want a whole career in insurance.
That's awesome. Yeah. I mean, it just fascinates me because I think all of us, I think, we kind of find our way somewhere, near the industry, and then that's all she wrote. So fair enough. And so now thank you, by the way, for pushing that stat down, because it makes for more of a story, right? When you've got an entire industry of people who just fell into a career. So that's awesome. And so now talk to us a little bit about what you're doing, and would love to hear about really what the overall value prop is for Bamboo.
So today I'm the Chief Revenue Officer at Bamboo. Oversee not only sales, distribution, marketing, but also operations and that customer experience, agent experience when they interact with our team, as well as technology. So a fairly broad mandate, front of the house, primarily with the technology piece, really focused on delivery of that agent and customer insured experience. Our value prop at Bamboo is largely the same today that it was, call it 6 years ago when Bamboo was founded, and really three core tenets out of the gate was to embrace all things technology. This was, summer 2018, insurtech had just kind of started, to get rolling, but it wasn't, that wasn't our Bamboo big push, I tell you, and I'm sure we'll talk about that more, but embrace all things technology. The second piece was omnichannel distribution. Being a group of legacy executives, insurance executives, we understood the capital requirements to go full direct to consumer and what that would take. It wasn't something that we were interested in out of the gate. And then three was being capital efficient, capital light. 20 years ago, it was when I started in the industry, it was looked favorably upon to have excess capital. And today it's a drag on your ROE and your stock price, right? And so partnering with dynamic capital providers, capacity providers from fronts, strategic reinsurers, et cetera, is, from the beginning, something that we look to do at Bamboo.
Yeah, that makes a lot of sense. I know that I think earlier this year you guys were acquired you were acquired by, was it White Mountain Insurance Group? I think acquired you guys earlier this year.
We were, January 2nd. Our transaction with White Mountains closed. They purchased a majority stake, roughly 73% of Bamboo.
And what does that do for you guys in terms of, because we were talking a little bit about, getting capacity, getting,
Yeah.
capital, et cetera. What was the main benefit for you guys?
Going back to the start, Bamboo's approach as, again, a group of seasoned insurance executives coming together, it was bootstrapped from the beginning. And I was not one of the 10 founding members, but joined fall of 2020. So a couple years into the Bamboo story. And it was one of grit, determination, and hey, we're going to bootstrap this. I think if you look back at the amount of capital that we raised, folks would be surprised at how little there was. And therefore, when we got to a position where we started to scale and grow, the California market, which is where we primarily operate, certainly turned in our favor. And it was the right time to bring in a partner, provide some additional credibility to, I'd say, our balance sheet and ability to partner with some of the global reinsurers out there, as well as other fronting partners, right? They look at you a little different when you have a name like White Mountains behind you.
Right.
Not that our founding team doesn't have credibility, but sure. White Mountains has deeper pockets.
Yeah, that makes a lot of sense. So you mentioned California here, and I've been talking to a number of players, and not only on the MGA side, but even on the AM Best side, I'm learning the concept of the delegated underwriting authority entities, as they call them, and it's a complex term for MGA, I guess, or MGU.
Yep.
But you mentioned your core competency, or I guess is your major value prop, is in California, a market that's been historically difficult to find capacity and difficult for even the insured to find coverage. How is it that Bamboo makes that work?
Yeah, and this really gets to the heart of what we say we're good at. This is our value prop of being insurance, leaders at heart, and knowing how to fit technology into that, as opposed to leading with technology and trying to figure out insurance. And so there was a period of time where it was very difficult for Bamboo to get traction. It was very sexy to lead with technology. And we kept, telling the same story and being consistent that we are insurance folks who understand it's better to take an extra minute, make sure this is a risk you want to put on your books, understand capacity management. But how do we use technology to enhance the existing capacity management strategies, right? So one of our big things is real-time aggregation management. So when we look at a risk that's coming in, whether it's an agent or from our internal agency, somebody online, we can immediately tell you, what's the TIV within a 2.5 kilometer, radius, or what's the TIV within 400 meters. So we have like a micro and macro aggregation look, and that determines then which portfolio we're going to put it in, which fronting partner, which reinsurance tower is going to get that risk. Where does it fit best?
So when you describe that kind of real-time analytics, is that a proprietary capability that you all have built internally, or do you go to the market for package solutions that do that type of work for you?
We do a little bit of both. And so I would tell you, we don't have this 300-person technology staff, out on our payroll. But at the same time, we have built out our technology competencies. But we're never going to be the ones who look to build first. We will make use of industry-leading platforms that are out there, tools that are out there, but plug them in a way that is very modular. So that as the ecosystem changes with who's the leader from a pick on one aerial imagery, right? There's 5 or 6, there's probably a dozen different firms out there. And as one ebbs and flows, we want to be able to plug and unplug as needed.
Got it. I think, along those lines, I think you guys are on the cusp of making a fairly significant investment in core system processing. Do I have that right? So,
yes.
What are you expecting to get out of that? What is because I know that, at least for some of our clients, that's a big consideration, that investment in core. One of the first questions I like to ask is, what are you expecting to get? So what are you expecting to get out of such a big investment?
And part of this is I guess, the success that we've been blessed with to this point, and looking to scale this business to be, $1 billion, $2 billion top line of managed premium. If we think about it, and what is the platform that allows us to do that efficiently, that continues to provide the ability to be modular in the nature of what third-party tools and applications we want to plug in. And so we're going to Guidewire, looking to roll out all three: Policy Center, Billing Center, as well as Claim Center throughout 2025.
Can you share, Taylor, any of the things, and you and I come from a pretty similar background in some regards, with a lot of technology execution risks. What are the things that you guys are thinking about in terms of mitigating some of the typical things that happen when we take on these large investments?
Our technology team is led by two individuals who come from 15, 20 years of insurance technology background, right? So that immediately de-risks the project. They also have some Guidewire experience, which helps. Okay. So they're heavily rooted in that Guidewire platform and insurance.
Got it.
So to me, that helps me sleep easier at night. The second piece, our overall team that we've brought on board, we've hired some folks, again, as we're transitioning from, I'd say, an outsourced IT model to more of a hybrid. We've brought on folks within the industry who have also been within the Guidewire ecosystem, are familiar. So we're willing to, I would classify it as, we're willing to pay for the right resources. We have a virtual model. As you can see, I'm working from my home office here. So we're spread out across the country. We think that helps from a talent standpoint, who we're able to attract and get them on the team.
One of the things that strikes me, Taylor, is the growth of Bamboo. And so, beyond, some of the tricks that you guys have talked about already around, capacity management and some of those real-time analytics, what are some of the things that, I'm tracking here 109% revenue growth over 3 years, and, named to Inc.'s 5,000 list of America's fastest growing companies. This is an incredible success story. But what else beyond just some of those secret sauce elements you've described do you think has contributed to such amazing growth?
It starts with the team. I was fortunate to come in after a couple of years, joined an amazing team that is really passionate about getting up and working with each other. We solve problems, and don't get me wrong, there's been plenty of problems for us to solve along the way. But if you remain rate adequate, you look at our trajectory and what that 109% growth looked like. It was very slow and steady, like a traditional insurance organization the first 3-4 years, right? We made sure that we had the filed rates, and from your California experience, right, that can be a process. It takes some time, so you don't want to fall behind. We found ourselves, positioned nicely when the market changed, and had the right relationships with our distribution partners, our capital providers, the reinsurers. You look at that, when your loss ratio, you can only squeeze the dollar so far, right? And having an appreciation for everyone needs to have the economics have to work for everybody within the value chain for this to be successful. And that's one of the things that I think we've prided ourselves on, is we try not to get too greedy. We try to do things right down the middle of the road, ensure that we're in compliance with the DOI, and we have a great relationship with them. The reinsurers are getting their piece. The fronting partners get their piece. Our agents, we're 97% through agents, just a small sliver through our own internal agency. Everybody has to make money for this to work. So, and I think that's one of the things, again, from a team, you go down our roster of folks within the insurance industry, folks know that was kind of second nature to us. It wasn't as if we had to concoct something or make something up out of thin air.
It's that carrier pedigree is helpful, right? That's exactly the piece there. Yeah, and I think that ties back to what you were describing before as is that insurance first philosophy rather than that tech first, which there's a couple companies we can name that took a tech first strategy and they struggle to print money, right? And interestingly enough, Taylor, you'd asked me in the pre-show how ITC was going. Or how it went, and there was a panel there just for the sake of kind of continuing down this line. That was talking about, this was a panel of I guess, investors from the private equity arm or of the investment arms of various large carriers and some funds. And they were all saying at the same time that the level of investment that they're prepared to make in insurtech has dramatically shifted down. And the focus now being on where are the teams that have particular insurance underwriting expertise, that have a unique kind of niche underwriting value proposition, and that have demonstrated success over a period of time. That's kind of what I heard from the investment committee, if you will, at ITC.
I mean, it makes a lot of sense and speaks true to the Bamboo team. That's where we've been from day one, focused on the loss ratio, focused on, getting to profitability. When I joined in 2020, one of the reasons I joined Bamboo is because we were at or near break even. It didn't feel like that big of a risk when you're joining a startup that's running at or near break even. Sure, They didn't have this giant balance sheet, but if you're essentially cash flow neutral, it's not that big of a risk.
Yeah. That makes good sense.
So I agree.
Let's shift a little bit on the distribution front. So, what kind of trends in distribution are you seeing that are kind of beneficial or perhaps concerns, maybe potential headwinds that are out there? I know that a lot of folks are, on the carrier side are tracking a lot of consolidation in distribution. There is a little bit of a human capital crisis that's going on just in terms of as there's a changing of guards. Well, how do you see that affecting Bamboo going forward?
It's something we're certainly we keep our eye on. We're aware of what's going on. If you would have asked this 3-4 years ago, I suspect the general consensus in the market, and it's been around forever, right, is, the agent's going to go away. The agent's going to go away. We're going to do this all digital, all online. Hopefully folks are all on the same page now. Like, that's not going to happen.
Right.
Yes, there is a large and potentially growing segment of the population that is comfortable with purchasing online. Where we focus in the homeowner space, rental property space, the consumer wants to talk to somebody most of the time. They're happy getting a quote online, but then they want to go through that quote, understand the coverages with a live agent. Now, can that be a call center model? Yes. Does it have to be? Can it also be their network down the street at the local, small town Main Street shop? Absolutely. We typically see that the consumer likes to speak to somebody before closing the deal. It's great to get that quote. Okay, I understand kind of economically what my budget is. Does this fit in? But then going through, the various coverages, a couple examples with a live person. We do think that this is shifting, though, from it's not necessarily your neighborhood agent who you can walk into the office, but folks are comfortable with talking to the large kind of call center agency. And so that's a change that we're certainly aware of and embracing. And again, where we started, there's always going to be folks who are comfortable with the full digital experience, and we want to be able to serve them there. So from the beginning, we're omnichannel, and that's where we expect to stay.
Yeah, that jives with a lot of the research that we've done and we've seen. And it's interesting. We find that that Gen Xers are actually more comfortable with a fully online transaction than millennials are, which is really, really interesting. And their buying behavior suggests more that they want to be able to access information on their own, do their own research, arrive at their own conclusion, but then have it validated by a professional with whom they make their actual ultimate purchasing decision, which is a fascinating trend.
And it's spot on. If I think about my own experience, I shopped 2 or 3 years ago when we moved and did exactly that. Quoted online, got a handful of things, and here, an educated insurance person, and still, okay, I want to talk to you. Let me understand specifically with your organization, how would this play out? How does this play out?
We are kind of sitting down waiting for an economic downturn. It seems it's everyone, all the pundits are talking about it's coming. But we still have this vacillating inflationary pressure that's coming up and down. But if you think about it and you chart the course toward the future, assuming that, that there isn't necessarily going to be a quick solve to inflation, or assuming that there will be some type of economic downturn, what is Bamboo thinking about kind of more macroeconomically and how to prepare for any eventuality in that space?
Again, certainly aware of it. When we think of the market that we're operating in California today, and something that we are looking at in the future of where are disrupted markets, where can we play best? Where we can play best is in those disrupted markets, dislocated markets like California. We are looking to go into Texas in 2025. Very similar from a peril perspective. Obviously, it's a little broader than just wildfire, but some of our technologies, again, the aggregation management, some of the underwriting tools on the back end, the APIs that fire real time, we think will play nicely in Texas. So we are not, to answer your question, while we're aware of it in the macro sense, when we think about the dislocated markets, it's not as big of an impact. What we are seeing, though, and I guess this is something that's emerged in the last, it's probably longer, but we're really tuned into it the last 4 weeks or so, is consumers opting for less coverage. Someone who is truly extremely price sensitive,
right?
Or maybe on a fixed income, that $1,700, $1,800 insurance payment for the year, like that's it. They can't go up when you see California rate increases. It's not atypical now to see a 25, 35% rate increase. It might take 6-9 months to get it through the department, but that's kind of where things are at. And so with those rate increases, the consumers are really looking for what are my options? So a scaled back, there's been a number of new E&S players in the market who are offering, I call it coverage light options to reduce the annual premium.
Yeah, I'm not as admittedly as familiar with some of the dislocation in California as I am with Florida. Being a Floridian, it's something that I'm tracking and very acutely aware of. But I want to ask if you're seeing a similar circumstance. There was a pundit that I was tracking last week, actually on the heels of 2 back-to-back hurricanes, who talked about the potential for the Florida coastline to become essentially economically unviable. When you think about the fact that you've got homeowners that are being actively priced out of the insurance market, whereby you're looking at homeowners insurance rates that could approach 5% of the home's value at some point, just kind of pushing people out. Is there a similar risk for California, you think, in your crystal ball?
California, I would say no. So when you look at California, and I'm the opposite. I'm not as familiar with Florida. We've done a decent amount of research, obviously, on Texas, and we know California. Yep. California is an attritional state, and we pride ourselves on being, a non-cat book. We don't think we have the smartest, I'll say, wildfire tool to be able to know what side of the mountain's going to burn. And then right the other side, like that's not us. We just avoid the whole mountain. Right. And so from that standpoint, your perils in California are much more limited compared to a Texas where you're dealing with, hail, tornadoes, you've got the wind along the coast, right? So you really have it all. In California, you've got quake, which is largely excluded from your standard homeowners policy, and then you've got the wildfire risk, which you can largely underwrite around because you know where it's going to be. You can't underwrite around hailstorms the same way, just like hurricanes in Florida. So that's a big difference. Our book is sub 6% cat risk in California, so we're very much a Main Street America attritional play.
So what I think I'm hearing from you, Taylor, is I should sell in Florida and I should move to California because it's much more.
You need to consult a tax advisor before you make that.
That's a great point. That is a great point. Yeah, you got to factor those economics in. Makes a lot of sense. Taylor, at the beginning of the show, you talked a little bit about kind of what your broad responsibilities are for Bamboo, and I'm a little bit of a shift here into career career advice for some of our audience here. And one of the things that it reminded me of is I'll never forget the emails that I got when I transitioned from being a technology leader in the company, and I transitioned over to being a business leader. And everybody was like kind of scratching their head. Like, first off, like, holy cow, can't believe you did that. That's amazing. When I worked with you, you were a CFO, and now you're essentially running the front office of an insurance operation. How, first, I have a bunch of questions around that, but it was, what do you think were some of the things that you did as a technician, I would call it, right? A financial technician. What were some of the things you did around your career and around your skill set that prepared you for what I might offer as a very, very different role?
Yeah. So for me, and I can think back to a very pivotal moment in my career, in my journey. I was with Ernst & Young, which have the utmost respect, and had a great 10 years at E&Y. It was a very difficult decision to leave, but I was going through an internal inspection, on the audit side, right? The audit of the auditors was coming in, and it was kind of this like, WTF, what am I doing? Like, for me, it was very clear that wasn't for me. I needed to go get on the other side, be part of an organization. I told people prior to Bamboo, I was at Kemper, and when I was interviewing at Kemper, that my whole thing was, I want to be part of a team that's making strategic decisions and that's running a business. That's what I wanted in my career. And from there, where we met as a business unit CFO at Kemper, and then on to Bamboo as the CFO, and my role here has continued to expand, but it's largely on those same heels of wanting to partner and work with people across the organization. I certainly don't have the Ivy League pedigree. I am not the smartest person in the room, but I do think I can communicate well with folks. You learn, always hungry to learn and build. I like to roll up my sleeves and figure out how do you solve this? Okay, well, let's throw it in Tableau, and can we cut the data this way? And what YouTube video can you watch to figure out how to build it? Right. So that's a little bit of I guess my MO, or how I got to where I'm at.
Yeah, well, I'm gonna try. I've asked myself this question, and I fail at coming up with a cogent answer 100% of the time. And I'm gonna ask it to you and see if you've got something, which is, technologists and I would offer, financial folks are similarly built in a kind of a risk adverse way, right? Whereas we're always kind of looking at where the technology is going to fail, or where the implementation is going to fail, and what do we do about that? Financial analysis is all about where are the risks in the system and how do we mitigate that accordingly, and making, where are the audit risks, the audit control point, all of that stuff. How do we as technicians acknowledge that element of our DNA, but still allow ourselves to envision the art of the possible and take the necessary business risks that allow for 109% growth?
Great question. And I might not be the best to answer this, because I think I was a bad auditor, because I always had this filter on, like, why are we asking about this question? Like, this seems irrelevant. This actually isn't driving the business. And so I do think you have to have that filter, as you say, to what's gonna be the biggest business impact here. We routinely have conversations about should we develop this new product, a stripped down coverage thing, as we were talking about earlier. Should we do that? And it's kind of like, hold on. What's the opportunity? Let's make sure we're focused on going after the, a product, a carrier, a capacity, a distribution partner that's going to address 75% of the problem, not the one that addresses 10% of the problem, right? I don't know. I don't know technology yet. I am learning. I will get there. But it's been interesting to work with our technology team more closely over the past couple months.
Amen to that. All right. Well, last question for you, man. And it's another one of those kind of crystal ball questions, and one that has a little bit of a technology flavor to it. But as you look at the advancements coming in technology, just around the board. I can't have a conversation about technology without AI coming up, that type of thing. As a business leader, what are some of the things you're looking forward to capitalize on? What are some of the things that you're hoping are going to have the most significant impact on growing your business?
On the AI front, topic we've obviously spent a good amount of time discussing as a leadership team. Our view, and not surprisingly, is I'll call it human in the middle of understanding what is the power of AI, how can we use this, and it's different within each of our functions, right? Mm-hmm. The underwriting team can use AI to process large quantities of data, the historical risks that we've had on the books for the past 6-7 years, all sorts of information that just you weren't capable of computing at that speed in the past. And so their use is very different than our operations team that is looking at, okay, how do we make the existing chatbot more functional, provide better answers, more specific to what this insured is looking to get at? How do we make that quicker? Which is different from claims. And so we've really taken this approach that each functional leader has to be engaged in the AI conversation, has to be focused on how are they using it. It's not enough to just know that it's out there, but you have to adopt this in some way, because it's not realistic that you're going to tell us it doesn't fit within your function. But yet we don't want to mandate that it's going to be done this way because it's so different for everyone. So that's a little bit, we're still evolving in this AI journey that we have. But I think that foundational principle that I started with of human in the middle, we will develop all these tools, we'll put them into practice, and then monitor very closely for an extended period of time, even to the point where once our true Bamboo onshore team is done and says it works, we'll send everything, offshore for a BPO office to double check, like as a quality control for an extended period of time as well. To us, it goes back to the underwriter's carrier mentality at heart. Quality is above all, and loss ratio is above all.
Do I hear in that though, Taylor? Because I picked up on something where you were talking about your functional leaders. Is there a cultural dynamic where, from a leadership perspective, you are actively encouraging your functional leaders to be thinking about and driving that conversation about AI? Because that's something that I think is new for me, talking to someone in their company about how they're driving AI adoption. Did I hear that right? Yes,
absolutely. We have put together a group of functional leaders and essentially said we're going to be, well, I won't say we're on the forefront of turning AI loose. We want to be on the front of how are we applying AI within our business. And AI means a lot of things to a lot of people. So I think that's a good one to establish too. But how are we continuing to evaluate what tools, technologies are out there? And in a lot of these, we touched on this earlier, will be third-party solutions. We're not going to build our own chatbot as an example, right? We're going to partner with somebody who we believe is best in breed, has whatever XYZ qualifications that we're looking for, and implement that in a modular format.
Taylor Mobley, thank you so much for joining me on this discussion. It was fantastic to hear kind of where you guys are at, how it is that you guys have managed this incredible growth. And thank you to my audience for tuning in for another episode of 5 Minutes. Hope to see you on the next one. Please don't forget to hit like and subscribe. Thank you for joining this episode of 5 Minutes. If you've enjoyed our discussion, we'd love for you to share it with anyone else you think might find it interesting. Also, please subscribe on whatever podcast platform you're listening on and hit that bell to stay on top of the game with our practical 5-minute episodes. We look forward to seeing you again next week.